Greetings, members one and all of the Salivation Nation. What is gold doing that we haven't seen in 5 years? Well, we're going to explore that with this article, and it's quite fascinating. This comes to us from Sean Williams on The Motley Fools, where it's posted. And it says the past 2 months have been something of a wake-up call for investors. After a particularly uneventful 2017, which saw the stock market precipitously climb without much in the way of downside moves, the swiftness of the February and March corrections caught Wall Street and investors off guard. It took just 13 calendar days for the broad-based S&P 500 and an iconic Dow Jones Industrial Average to fall from their all-time closing highs to correction territory, i.e. down more than 10%. As you might have expected, not too many industries have escaped the sudden downdraft in stocks. The fast-growing technology sector has been volatile, with social media giant Facebook embroiled in a data scandal. Meanwhile, most U.S. multinationals have struggled in the wake of President Trump's tariff announcements on steel and aluminum. So we haven't seen this happen in 5 years with one particular asset which hasn't crumbled in step with the stock market, and that is gold. Looking as lustrous as ever, the shiny yellow metal has advanced by a modest 2.4% year-to-date through April 12. By comparison, the Dow and S&P 500 have dipped by 1.4% and 1.8% respectively since the year began, and by more than 10% on a few occasions since hitting their all-time highs in January 26th. Strong first quarters have been somewhat common for gold over the past couple of years. In fact, in 2016, gold wound up delivering its best first quarter performance in 3 decades. But it's not the nominal increase in gold during the first quarter of 2018 that's so impressive. It's what the precious metals has done from a trading perspective since the year began. Since crossing over $1,300 an ounce on December the 29th of last year, gold hasn't looked back. It has been 105 days and counting since gold actively traded below $1,300 an ounce, which is the longest such streak since prior to June of 2013. Make no mistake about it, gold has crossed over $1,300 an ounce quite a few occasions since June of 2013, but at no time had it stayed above its watermark for longer than 101 days until this past week. So this, we'll take a look at it and how it's regained its luster according to this article. Why the sudden interest in gold? Probably has to do with a combination of 3 factors. To begin with, fear is playing a role. Gold has long been a go-to investment when the volatility index, a gauge of investor fear, spikes higher. Considering that the outlook for a trade war between the U.S. and China has seemingly changed by the day, uncertainty has provided a spark that's fueled modest upside in gold. Of course, you should also keep in mind that certain uncertainty isn't exactly quantifiable, meaning investors' emotions are playing a role too, a psychology aspect that I've mentioned many times here on this channel. Second, and perhaps the most consistent factor over the past year that has aided in gold's ascent is a declining U.S. dollar index. That's a big one. Historically, the dollar and gold, which are denominated in dollars, tends to move in opposite directions. I'd also attribute gold's recent strength to the struggles in the cryptocurrency market. Once perceived to be an alternative to gold as a store of value, Bitcoin and its virtual currency peers have proven to be anything but a store of value in 2018. Since January 7th of 2018, the aggregate cryptocurrency market cap has plummeted as much as 70%, pushing investors back to traditional stores of value such as gold or silver. And I'll kind of stop there and make notes, make a note about the dollar index. Since 2016, the dollar has lost approximately 11% of its value. And with cryptocurrencies, even when they were strong, gold was still holding pretty steady, and silver too. This is what really has the attention of the author. Precious metals themselves don't always make for the best investments. In fact, I'll go a step further and say they're not investments at all. You've heard me speak about that on a specific video and in other live streams and videos. Physical gold and silver offer no dividend yield, and you have no way as an investor to really dig deep into fundamental data. Instead, investing in the mining and or royalty companies that produce precious metals is usually the smartest way to go. Some people would beg to differ these days on that account. With gold having consistently stayed above $1,300 an ounce for 105 days, and mining companies still being relatively cautious with their capital expenditures, yesterday I posted a video about about the Golden Triangle in British Columbia. He wouldn't be surprised if he witnessed precious metal miners run circles around Wall Street's EPS forecast in the upcoming quarter. But a quick glance at precious metal miners, specifically those that focus on gold, reveals that a majority are down for the year. That they may represent an intriguing buying opportunity if the current gold price proves sustainable, and the mining companies in question have a means to reasonably expand production. And values in the eye of the beholder. And he goes on to talk about mining companies and how to invest in those. But my feeling is stick with the physical, and for your hedging. And if you want to invest and take a risk with some of the mining companies, by all means. I know when I was thinking about getting out of my IRA, the broker was trying to convince me to transfer that money to mining stocks, but I'm glad I didn't. Much happier with the physical precious metals themselves. I think they hold the best value. So post your thoughts about this exciting. I think it just goes to show you that gold is really the stable, the most stable of the precious metals in terms of its value. It's being treasured. Silver the second, as it's used so much as a commodity and a great store of wealth as well. And then you have platinum and palladium, which are also coinable precious metals, but also industrial and as a commodity as well. So post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.